Ambition is a powerful thing. But ambition alone never changed anything. Ambition wanted brighter candles. Engineering gave us the light bulb. Ambition wanted a faster horse. Engineering brought us horsepower. Ambition wanted louder guitars. Engineering plugged them in. Ambition wanted to go higher, further, faster, beyond. Engineering makes it happen. But ambition never stands still, and businesses need financial technology that keeps up. We started with payments, tackling head-on the patchwork of slow, legacy systems holding businesses back, and building a single platform from scratch. Global, fast, purpose-built to pounce on every opportunity. Now, we're turning our attention to another fragmented ecosystem and doing for financial products what we did for payments. More control, more flexibility, built for the next generation of game-changing businesses as part of our single platform. Because when ambition is met with the right type of engineering, the impact is exponential. Adyen, engineered for ambition.
So, end of the day, so we thought, we'd play a little video. How's the energy? Ooh. Okay, can I get a pair of hands from ambitious founders? Who is ambitious here? 1, 2, 3, a couple. Yeah, cool. Good news is, we can help you with your ambitions with payments and financial services. And that's what Adyen does. What we're going to talk today is about monetization lessons from working with the biggest marketplaces in the world. Adyen is a payments company with a banking license, and we were founded 16 years ago already. And we've built this one platform across the world with our own licenses and plugged 200 payment methods in, and run the payment rails for the likes of Spotify, Microsoft, Google, Meta. But also for marketplaces like eBay, or you heard maybe Fair in another talk, Etsy, Airbnb, Idealo, the German one, Willhaben is also here. So really the largest platforms on the planet, and they use our payment rails. So we thought it makes sense to talk a bit how they use payments, why they use payments, and help you guys really to scale with payments. And the idea here is that, I talk about best practices in the first part, then Joëlle will take over, talks about embedded financial services in the second part, and then we see how this all comes together with one of our dearest partners, Buycycle, Theo. And we see it in real life, how it all sort of comes together, that story. Now, I guess the first lesson that I can sort of give you, what we see, is that you've got to own payments. And what does that mean? When I talk to startup founders, when I talk to marketplaces in its infancies, then what I see sometimes is that you're very busy with generating demand and supply, and with caring about CAC and your cost of acquisition and marketing channels. And very often, payments, the last bit of the entire sort of equation, is forgotten. And very often, what I see is it's just sellers and buyers, and you bring them together, and you hope they figure out a way to get together. And you monetize just on advertisements, or you go and partner with a payment method and say, hey, with Klarna, PayPal, you're good enough, please handle payments for me. And then what you see is that you only have a fraction of payment methods that you actually need to be local and relevant to your folks. And what we see is if you don't sort of think about payments from your first hour, then you lose a lot on the customer experience side of your users, right? The shoppers that come to you. But also you lose the trust factor that you can bring when you have everything end-to-end on your platform. What does it mean to own payments? You have to think about these things. You have to think about onboarding your sellers. You have to think, okay, how do I distribute payments, right, on my platform. Who do I pay? What do I pay? And then, of course, how do I pay my sellers once the purchase has been done? In local currencies or not? How fast do I pay them? And ideally, this is all compliant, and ideally, this is all automated and coming out of one hand. Now, if you do this right, then it looks a bit like this, right? You have an online order, let's say 100 euros, and comes to your marketplace, and what we see is a good sort of average, I guess, platform fee that you can take across our merchants. We work with hundreds and hundreds of marketplaces. Is about 5%. 5% is sort of the average that we see across all marketplaces. It varies a bit if you have high ATVs or low ATVs, but on average, 5% is what you can take very easily on every payment. You could call it platform fees, you could call it payment fees, whatever you want to call it, but that's what you charge the buyer just to make that service happening, right? And that's what you can book as your own revenue. Now that makes you really interesting to the VC community, because all of a sudden, not only you have sort of your advertising revenue, no, you also have payments revenue that you can book as your own revenue. In this example, if you say, make it easy, 100 euros, and you take the 5%, 5 euros, usually there's a payment cost of 1 euro, make it easy. You end up with 4 euros on every transaction, on top of what you earn with, monetizing your users otherwise with advertisements, for instance. If you do it right, then it adds also trust to your platform. Because what you can do is, for instance, release the amount to the seller only then if the buyer says, yes, the product is in good order, I like what I got, 5 stars to the seller, and that's when you release the payment. So you add a lot of trust to your platform if you do it right. Even if you have an open ecosystem, like Wix, for instance, right, or Commerce Tools or Shopify, and you create your own payment service, and you do it right, you see that a majority of people will choose your payment solution simply because it's convenient, it's secure, and they just trust you with their money. Now, what you can also do if you are in control of payments is you can, especially in the C2C marketplaces environment, you can turn these sellers, right? If you sell something, you could turn them into buyers again. And you can create this flywheel on your ecosystem, on your marketplace. So basically what you do is, let's say you have a seller. Let's take eBay as an example. Or Vinted, even better, Vinted. So they work with us, and what they do is you can sell used clothes on Vinted, right? Used stuff, anything that you really think of. And what they do is they give you an account, a digital wallet. And that's where your proceeds will go to. Let's say you sold that shirt for 30 euros. 30 euros land on your wallet. Now, I'm a seller, but maybe I also want to buy something for my kids. So I can use the 30 euros that is on my account, again, to buy something for my own. And that creates this very nice sort of flywheel on your platform. And that's how you turn sellers into buyers, and all with payments, very easily. Here we see an example how it works in practice. You have a start balance, 10 quid, and then you sold a couple of things, you end up with 22 quid. You can either withdraw it to your bank account, or you use it again. So, very nice way to monetize. Okay, so you got your head around taking payments into your service proposition. You've built an infrastructure, and what's next? Well, what we see is it's not enough to just offer payments like cards only. No, you need to be local and relevant in the time that someone wants to make a purchase, right? So why is this critical? Because if you offer just cards to someone in Germany, the chances that somebody will pick you are pretty slim. Why? Because not a lot of people like to pay with their cards in Germany. People prefer in Germany to pay via invoice or via PayPal. If you just have cards, you lose that customer. Same goes for payment methods that are not secured. A bank transfer, SEPA direct debit, right, would be one of those. If you accept SEPA, then what a lot of people don't know is that even months after the purchase, the person who's used SEPA direct debit, like a bank transfer, can claim it back easily. They just have to call their bank and say, it wasn't me. Somebody else put an IBAN in, that it wasn't me. And what you end up as marketplace is bearing that cost. So probably these kind of payment methods for first-time buyers is not something you want to show. And then again, if you have the best payment mix, if you have everything sort of on your platform, it really depends also what I prefer as a shopper. If I'm on an iPhone, then I don't need Google Pay, right? And so that combination gives you the best sort of way to be local and relevant. Now, make it more tangible. What does it look like, especially here in Europe? In Europe, you have all these countries. And here in Germany, again, Klarna or pay by invoice is sort of relevant. PayPal is relevant. If you go to the Netherlands, that's where we are based. 75% of purchases are done by an online banking method called Ideal. If you expand your marketplace and just offer Klarna and PayPal and credit cards in the Netherlands, 75% of people miss their preferred payment method and very likely will not pay. What does that mean for you? You've built this great supply, demand network. You've spent millions, thousands on Google Ads, on customer acquisition. Everything is set up to the stage when the actual purchase needs to happen. And that's when you lose the customer. That's when you lose out. So you need to be local and you need to offer the preferred payment methods when it comes to geographic expansion. And otherwise, as Cloudbed says, you're not perceived as understanding the local market. And you have these examples in all countries, especially in Europe. In Poland, you have different payment methods and payment needs than in France. And so goes it for Germany, Austria, Switzerland, and others. Now, be relevant. Again, this iPhone example, I just ordered a pizza on Sunday. I'm on my iPhone. They know that I paid with Apple Pay before, so all they do is show me Apple Pay because it's the fastest way for me to check out. Very relevant in the time of pain because I was really hungry. And that's really that's what it comes down to. Be local and be relevant. Not just with payment methods, actually, also with your onboarding experience. So eBay in this case, what they do is they show very local onboarding experience depending on where you are. So let's say here in the US, what you see is that there's a check, right, on the right-hand side, where you have to then see, okay, where's my routing details, where's my account number, my bank name, which doesn't apply to Europe, for instance, right? So they changed that screen for European customers. Very relevant, very local, not just for payment methods, also for onboarding. Now, you got your payments installed, you got your own payments, and you are very local and very relevant. How do you grow from there? That's what Joëlle will talk about in the next bit.
Yeah, thanks, Max. Yes, moving on indeed. So, like Max said, payments are in-house, we're local, we're relevant, but what comes next? And what we see is that the platforms that have brought payments in-house can now make up to 80% of their revenue from embedding payments into their services. But now they're looking for a way to diversify, a new way of serving their customers. I think today on stage we heard a lot about creating value. So how else can you create value for your users, for your end customers on your platform? And that is by embedding financial services into your offering. When we talk about embedding payments, I just want to still point that out, that opportunity is still large. We recently did a research with BCG that we're going to launch in about 2 weeks. And there we saw that of all SMBs that we surveyed in the US and in Europe, only about 35% of those SMBs are actually leveraging payments from their platforms today. So that is still quite a big market, quite a big opportunity out there. And when we now look into the financial services space, only 5% of these SMBs are now taking financial services from their platforms. Now, what does that mean when I talk about embedded financial services? If you look at the upper part of this presentation, you see everything that Max was talking about. Bringing payments in-house, having a pay-in, having that in your marketplace and then selling that or paying that out, these funds out to your sellers. Now what you can do is extend that offering by adding a card, for example, a debit card that you could give to your sellers. Round that up with a bank account. So getting faster access to your funds as a seller has huge value. A lot of those SMBs are in urgent need of getting quick cash flow and want their payouts for the services that they sell on your platform as soon as possible. So by adding a bank account, that is an additional service that you can offer and then another value add. And then you can add it also capital or merchant cash advances. So again, coming back to that cash flow need that I have as a SMB, I can now basically get funds based on the volume that I've been transacting. We look at, for example, 3 months of processed volume, and based on that can make a full credit decision and give you a cash advance to help you with your day-to-day business. And all of that is powered by our embedded financial services offering. Now, I do just wanted to highlight a few examples because you might have seen this already out there in the market. But here, for example, we see Shopify, where they're saying, OK, you are onboarded with us, you have embedded payments, but now you can also add a bank account to your offering. You can get a card additionally with it. Or we have an example here from one of our customers, EPOS Now, that is saying, hey, restaurants, small, medium businesses, we know you're tight on cash, but we can help you financing your ongoing business operations by adding a loan whenever you need it, and we know it best. Why are platforms so well positioned in taking on that almost banking proposition? The reason for that is they know their customers. They know exactly what they need, when they need it, and they have the data to back these decisions up. And that is what we've been seeing. And I think that also rounds up the monetization tips that we wanted to give you today. But we felt it would be quite valuable to actually talk to one of those marketplaces and how they have brought these monetization strategies to life. So we've already talked about it and introduced you, but we have Theo from Buycycle with us here today.
Hello, thank you very much.
Yeah, nice to have you. So we talked about the monetization strategies today, but maybe before we kick off and tell the audience a bit more about this, perhaps would be great if you can quickly introduce yourself, give some background around Buycycle.
Of course. I'm super excited to be here, so thank you for the invitation. Maybe a little bit to myself. I'm one of the co-founders of Buycycle. Actually, I grew up here in Berlin, moved to Munich to study mechanical engineering, worked like a couple of years for consultancy. And during that time on the consultancy, like 3 years ago, I did my first triathlon. With a couple of friends, actually my co-founders, Jonas and Flo, joined the triathlon as well. And after that, like the passion for road cycling was born, I would say it like that. So I was looking for my first road bike and I wanted to buy a used one, so I went to the biggest overall marketplace in Germany. And what I found there was, on the one hand, huge potential, a lot of bikes, a lot of good deals, what was really like amazing. On the other hand, I found like a no managed transaction. What does it mean? So no safe payment, no shipping offered, no protection if the bike is broken or anything like that. So I was really kind of scared of the process, so I decided not to buy the used one. I bought a new one, but it was a pity because The new ones mostly are produced in Asia, had to ship to Germany. So a lot of new resources needed. And the existing resources are there, but the access is not feasible. At least in my opinion, was not feasible. And that was for us like the start, like my co-founders had a similar experience. And that was for us the start to say, let's make the access to the used bike market. And we built and we founded Buycycle 1.5 years ago. We launched our platform, our marketplace, and actually, we wanted to build a platform where selling and buying a used bike is convenient, safe, and where you always find the right bike for your personal need. For example, if you are into sport bikes, you found a family, you don't have time for the sport anymore, so you sell your sport bike, you buy a cargo bike, and you change it again if the situation changed. So that's really the target, that you always have the right bike for your personal need at the moment.
Yeah, really exciting. Hey, and now we talked also a bit about B2C and also B2B marketplaces. Can you just tell the audience a bit around what type of sellers, buyers are you onboarding? Are they mainly individuals, also customers or businesses?
Yeah, so it's a mix. 75% of our customers or seller are private persons, so peer-to-peer. 25% are commercial dealers. So we really have like the differences. The services mainly are made for private persons at the moment, but of course we want to increase the network of commercial dealers as well, and there will always be like an important part on the platform.
Yeah, clear. Hey, and I know you already told us a bit about your founding story and how you then differentiate, but still I think it would be just great to understand, because there is eBay Kleinanzeigen, for example, out there. How do you feel like you guys are making a difference with Buycycle?
Yeah, so of course they're like the overall marketplaces, and what we said is we want to verticalize the bike segment out of this overall marketplaces. This is the approach, the overall approach, and what does it mean? So we built a platform with platform services just for bikes, and we built a managed marketplace. So what does it mean? We take care about the complete transaction, we take care about the shipping, the logistics, so 80% of our bikes are shipped. We, or our partner Adyen, take care about the payment, so that you always have a safe payment for seller and buyer. We take care about returns if the bike is broken. You don't have to argue with some people in Germany or the other hand or other corner of Europe. You just give it back to us. We offer services just for bike, like a premium check. So we really want to be like the managed marketplaces where selling and buying is really easy and convenient. That's, I think, one core element. The second one is that we said from the beginning on, we want to be really data focused. So we had like a database of all road bikes of the last 25 years, I think, before we even had like a pitch deck or even a product. So that was really in our mind from the beginning. And what does it mean? So from a seller perspective, it's convenient. You just have to put in like brand, model, year. We upload all the specs automatically. We give you a price proposal. So it's really convenient, like selling process. What is good, because we have like a structured offer, and there we have like two big advantages. One is the buyer is finding what they are looking for. So we really want to have like the online shop feeling on the marketplace. That is always like our credo. And the second part is, if we have a really structured offer, it's way easier to make efficient marketing or organic marketing, because people are looking for the bikes, and if you have the bikes structured, then of course they will find it. And the third, I think, biggest element that is like the difference between the overall marketplaces is that I would say all, but most of the marketplaces are local, or at least national. And we started with Buycycle, like I said, 1 year ago, and people from Denmark started to buying bikes, people from Poland started to buying bikes, and we were wondering why we didn't spend any marketing there. And then we saw that there's different prices in Europe. You really have like a geo arbitrage thing and effects, and that's the moment where we realized, okay, Buycycle is an international marketplace from the beginning on. So now on the demand side, we ship everywhere in Europe. 1/3 of our revenue is already international. What we are currently working on is that we really have to supply international as well. So in the end of the year, when you're sitting in Norway, you can buy a bike from Portugal on Buycycle. That's the target. And that's, of course, two big advantages. For the seller, we have the biggest reach. For the buyer, we have the biggest offer. And that thing is crucial for our business and our advantage.
Yeah, I think a few things that I hear, right? Reliable and also easy experience for your customers are key. So really building that platform that they feel like they can easily sell something, but also that I, as a buyer, have a safe experience, and also the local experience that we were talking about, right? Yes. So you're now internationally, that just happened, but you're now also officially looking to expand, right? With a bit more, I would say, not just because it happens, but actually because you're planning to.
Yes.
What are some of the learnings that you have there, and then maybe perhaps also with regards to payments, anything you can?
Yeah, of course. So what I'm learning currently is if you go international, it's getting more complex. So really the processes are getting more complex. You have more languages, customer support is getting more complex, and payment as well. So from the beginning on, for us it was really necessary that our processes at the moment are efficient. And for example, for payment, we had like one provider for the pay-ins, like the buyer is paying for the bike, and for the payouts when the seller getting the money. We had like two providers, and it's always like a complex process themselves. So we are happy that we have Adyen, where we have like a one-hand solution, which is way less complex, so that we can add complexity with the internationalization. And of course, you have different parts, like we want to be multi-language, not only multi-language, but multi-currency as well, that we build trust for the people. When you're sitting in Denmark, you go on Buycycle, you want to have your currency, your language, that you feel like trusted, that the conversion is getting higher. So that's like a main part of our topics at the moment. And the third part, I think, is, of course, you had it in presentation. You want to have your payment method, otherwise the conversion will be low, and people are not buying the bikes. And it was funny because the example of the credit card, we started actually only with credit card payment, and it was so difficult. Users were calling us all the time, we can't pay, I don't have a credit card, and it was like the time where we only had like users in Germany. So that's one key learning from the first year. We always need like the local payment methods to have like a high conversion in the checkout.
Yeah, cool. Thanks a lot. And then we talked about monetization strategies. So I do want to ask you that too. So if I buy, for example, a bike on Buycycle, do I, as a customer, pay for the payment fees, for example? Do you somehow hide them? Are there any other services or so that I can purchase? How are you packaging that up?
Yeah, sure. So I think like Buycycle, we have like two main business models. One is the marketplace, the managed marketplace, where you have like a platform fee. And for example, the payment fee is part of the platform fee. It's more or less the 5% that you were talking about. So we really have like the overall fee where we put the payment fee inside for all transactions. And the second part is that we have a refurbishment. So we do like at the moment kind of cherry picking on our own marketplace. We buy the bikes, we refurb them, and we sell them again. And there the payment fee is part of the final price of the refurbished bikes. Actually, we put it in the price. It's kind of a pricing.
Mm-hmm. Yeah, clear. Let's talk a bit about the future, because it was also part of our talk, and it is the hot topic also that we heard in the Excel talk earlier. So we mentioned that we, Adyen, expanded into embedded financial products, and I talked a bit about the issues that especially businesses have, and having cash flow and also access to banks. Do you see, for example, having a bank account for your business sellers, interesting, giving them a Buycycle card perhaps, or even helping them with additional cash flow through capital? Is that something you could see in the future going into?
Totally. I mean, I think there are two elements. One is the wallet part that I really like, because we started Buycycle, and what we see is, especially in the enthusiast space that we are currently, people are not like there is a retention. It's not not transactional. So we have like around 15% of people who getting from seller to being a buyer or the other way around. So people are when they're buying, they're selling at the same moment. So we see that 1 year after 1 year, you see that people are selling more than one bike. People are buying more than one bike. So that's really our approach to build like a lifelong platform, not only like a one-time platform. So really that we have a high lifetime value. And the wallet would be, of course, amazing because if you sell and buy at the same time, then you can do it with the same wallet, and people are currently asking for it, actually. So really you have the customer feedback of that. And the second element is about our network of commercial dealers, and I think it would be great to have accounts for them, because what happens, you go to a bike shop, you buy a new one, and you want to sell your old one, but bike dealers mostly don't want an old bike because there are two things: they don't know where to sell it, and they don't want to spend money for it. So we try to sell, to offer a solution where you can sell the bike, and if we can offer them a solution to get like money in advance to finance the bikes, it would be a great fit. So yeah, I'm really stoked to see what is happening there and how we can integrate this into the platform.
Yes, yeah, exciting, right? And it's also the way of looking at it a bit ahead and seeing what the future holds.
Yeah,
so
definitely.
Really curious. Hey, and last question: anything else that excites you when you think about the future of commerce? Anything that?
I mean, I don't think it's a really new thing, but I'm really stoked or happy about the e-commerce boom or boom. Let's say it's increasing. So I think it's crucial that we use our resources that we have as efficient as possible, and I think it's great that teams. Companies are going into new segments with new ideas to really try to push the e-commerce sector. And I mean, that's the idea of Buycycle, and that's what drives the team, that we say, okay, we want to have, on the one hand, we want to offer like an alternative to the car with easy access to bikes, that you don't have to go by car to work every day, that you can use the bike. Then it's easy to change the bike, like I said, to switch it if you have like a different change of your needs. It's one level, I think, and the second level is, I mean, every carbon frame. I would say mostly every carbon frame is coming from Asia. It needs like 30,000 liters of water to produce. You have all the numbers, so a lot of resources needed. And I think people are thinking about the consummation and the sustainable consummation. So we are really happy that we can extend the lifetime of bikes and just be a part of trying to use the resources as efficient as possible to manage the climate change as best as possible. So I think that's really something that is great to see, and that I'm really excited about it.
Yeah, it is exciting. I think so much for sharing that. I think we're certainly excited to be somewhat a part of that and see how Buycycle will grow in the next few years. So thanks so much, Theo. Thanks everyone. That was it from us. Please feel free to ask any questions if you have.
Hello. Did you test different levels of the fee that you were charging, or did you get straight to the 5%?
No. Actually, it was a long process. So we started with a straight fee. It was no percentage, just like one straight fee, because we wanted to be really clear in our communication. And I think it was good for the first month, but it's not the smartest way to price, actually. We learned that fastly. And now we are still in the process. So we went to a commission percentage fee, and we always try to make the fee not too high, not too low, that we are increasing our take rate, but not, avoid growth. So that's something that we are always working on, and I think that's a process that is ongoing. And on the other hand, we're always thinking about new services to add that people don't have to, buy them, but people can use. For example, we bought a ultrasonic machine for scanning like carbon frames. I'm really happy about it because it's really cool. And that's a service is really good for our refurbishment, but that's an additional service for our marketplace as well. And that's something that we really is additional to smart pricing, put new services online that we increase our take rate on the marketplace.
And maybe to add to that, so what we see is that, I mean, we said 5%, right, on average, but that's sort of, it really depends on what you're selling. And what you see is that sometimes if you sell very high value item goods, then 5% is quite a lot. And that you see typically then also when you have like an average transaction price of more than, I don't know, 5,000, 10,000 euro, you can't charge 5%. Then what you see is that what marketplaces do, they based on value, they change their price, right, very often. Or we see it that by category, they charge a different fee. But it all adds complexity. So what we also see is the more you sort of differentiate between all of these different things, the more potential confusion you could generate as well. But yeah, it's a bit of trial and error, I guess. But I guess what we wanted to do here is just give you like a reference, right, that we see, and then maybe you can sort of play around with that for your own user group.
Any more questions?
Theo, what bike do you ride?
I actually ride a Canyon Air Road, so I'm a huge Canyon fan. And additional information, Canyon is like one of the most popular brands and models, so the price is completely flat. So I can ride the bike for 1 more year and it won't lose any value, so I can sell it for the same price next year if I want to. That's the great part about bikes at the moment. I always like the comparison with bikes and watches. Bikes are the new watches. The value is stable.
Hi, I have a question for Theo as well. So my question is about the shipping of bicycles. So do you see it as not a problem, but maybe as a thing which is stopping you for scaling? Because bicycles are pretty big and also to some extent fragile. So I'm curious to hear how you're tackling this.
Yeah, so I mean, we are working with logistic partners, and currently, I mean, for us, it's not really a problem to find partners to ship it from Germany outside to all over Europe. So that isn't really complex, or is like something that is like against the growth. But if you add the complexity of shipping bikes from, let's say, Spain to the Nordics, then it's getting more complex. But you always have logistic partners, so there is like a good network of logistic providers. It's just like the complexity to manage all of the providers. So that's of course a huge asset if you have like good prices and figure out all the ways that are possible from each country in Europe to each country in Europe. So it's like a matrix. Then it's a huge asset. We are working on it, but it's definitely not something that is against our growth.
Maybe also one more practical example. Vinted, right? I mentioned that marketplace. They have their team that takes care of buyers and sellers, but then they have established 2 separate teams aside of that. One is for payments, okay, we discussed that at length. The other one is for logistics, right? So they see that logistics and payments are sort of the main components additionally to what they do on their marketplace anyway. I guess there can be a whole section on embedding logistics in the next one, but
yeah, I mean, this is our organization actually. Yeah. Of course, that we have like the payment team. Operations is always payment. Operations is always logistic, and operation is always like a customer support. And the refurbishment for us, it's like a new segment, but that's really one of the core assets to connect complete Europe with shipping partners, which make it I mean, amazing that you have the biggest offer of bikes you can have.
I can probably do one more question. Anybody?
I have a question for Adyen, because we are Vicky, a platform based in Amsterdam.
Yeah.
So obviously we investigated Adyen as one of the payment providers, but during our startup time it was a very costly option, although very favorable to a lot of our partners. So do you have maybe something for startups or like a specific fee model, or should we just wait till we're big enough?
Yeah. So to be fully transparent and fair here, right, that if you start out with no payments at all, then probably other providers that sort of focus on entrepreneurs and startups are better suited to help you to get it sort of off the ground. Where we usually come in, Adyen, is when you want to scale internationally or globally even, and you really want to sort of take the next level, go to the next level of growth. That's typically when we come in. Why? Because our solution is completely API-based and sort of super flexible. You can change everything in the API calls, and you can be in full control, whereas other providers, it's more plug and play, and it's more like a black box. And the other thing is that we always offer like a white glove sort of treatment, so you always have like an account manager, for instance, right, that helps you to decide if you go to the Nordics, okay, what payment mix do I need? Or decide on what is sort of the right payment methods to show for a first-time buyer. So you have a very sort of dedicated resource on that side. It only, for us, our business model is that we take also, we basically take a cut on every payment, right? And for that, we don't have any sort of integration costs or anything like that. But then it only makes sense, of course, the entire business model once you have payments already running, right? Because the other side will be fully automated, but sort of a plug and play sort of offering where you can click and get your payment needs done. Usually we are the better choice once you grow.
Okay, thanks.
Awesome. Well, thank you very much. Max, Joëlle, Theo, please, a round of applause for them.